Okay, we are recording.
I did find the,
Yeah, if you
ruling
could,
here,
yes,
so that's case number EQCV 027965.
okay, thank you.
Yep.
Call Doug and Donna and tell them 15 minutes, or what do you want? Gotta finish up everything else first?
Yeah, we just have our board discussion and auditor discussion, so,
Maybe tell them as soon as they get here,
yeah, that'd be just fine. So we can get that finished. If you wanna call Doug, I'll call Donna.
Okey dokey.
Okay, when I'm out, I'm gonna borrow from you.
Yeah.
It is a lot of money. This one's pretty good.
Hey, Donna Carter. Hey, we are back in business in the boardroom if you wanted to come back over. Okay, sounds good. Yep, bye. She's got about 30 minutes that she can come over for.
Yeah.
We gotta go, so.
Doug's not answering. Hey Doug, it's Howard in the boardroom, we're back and ready to talk about insurance. Thanks.
Do you want me to message him?
He was on the phone? Or,
No.
oh, that was a message, okay. Yeah, I got a cell phone.
I'm texting him.
Oh, okay.
Okay, so, do you want me to go?
Yeah, you can start auditor discussion, we'll just pause whenever they get here.
Okay, next week, Bridget from PMCA is gonna come and talk about changing the deductibles for, insurance.
Okay,
And then John Torbert from Iowa Drainage Association is gonna come and do his annual visit. And then I have appointing an engineer to locate wetlands and follow through with the project, what we talked about today. And at 1 o'clock, we have the proposed tax hearing for fiscal year 26-27. So that is next week. Did you guys all see the email from Doug Forshoe to meet next Friday at 9 o'clock at the Emergency Response Complex?
Yeah.
Okay, make sure you reply to that if you can, if you have that on the calendar.
I replied to that, didn't
I
Yes,
don't
you
remember.
did, Carter.
I? I did, okay.
And then if you saw the, Doug says he's on his way, he was on the phone. Email from Elizabeth about the line items and how to set up the budget line items. If you want,
I was gonna ask you.
yeah, if you want to, come and see what line items I made up, you can come to my office and I'll be happy to talk with you about that. And show you where we're at with that.
You said the budget meeting was in the afternoon next week?
1 o'clock, it has to be a separate hearing, it cannot be mixed with another agenda, it's a whole separate agenda, whole separate meeting, can't have any other business.
What's that amount to?
It's just, we present the,
It's a public
Out
hearing.
Yeah.
loud, nobody will be here? Or is
No,
that,
sometimes
there's
there
been
is.
a room full and there's been hardly
Okay.
anybody, so
Yeah.
just depends on the year.
Yeah,
okay.
so, that's what that is, and I think that's all I have,
I wouldn't anticipate it being
That's fine, but I don't think.
huge this year.
so. Yeah, I haven't gotten a lot of, the postcards have gone out in the mail.
Yeah, my.
They went out
dad just
Thursday,
got
so
one.
people should be getting them, so we haven't gotten a whole lot of calls yet, but
He said to tell Howard to quit raising taxes.
Who said that?
My dad, I was just there.
so. That's all I have.
Alright, well, Josh? any board report? Oh, yeah, okay. Doug is here.
Yes,
I'm sorry, Doug.
I was on the phone, sorry.
My mind was,
You were just doing your routine.
I was doing routine.
Yeah.
Okay, well, we are back talking about health insurance. I guess I was a little confused this morning of, I just wanna make sure I understand it right, so we had the option of what we discussed for having employees, I'm not, the wording is not coming to me, but that had fees associated with it, versus the county picking it up on ourselves. I can't think of the name, I'm,
The line of credit.
line of credit, thank you,
Yeah.
thank you, line of credit, was just the two options that we were looking at, is that
Well, I
how I
think
understood
there's
it?
many answers to
Sure,
that question.
Sure,
I think what
I
we
mean, do nothing is obvious, is certainly
well,
an
right,
option.
right,
Having insurance is an option. Front loading the $1,200 prior to
right,
is an option, and if a person gets into it, gets into that situation, having Kossuth County provide the loan or the remainder of the $1,200 is definitely an option as well.
mhm,
And there's many, many more, I'm sure.
yeah,
So what would be the mechanism for Kossuth County to do it? Every time I think of something, there's a reason we can't do it, because it's not in the budget, or it's not this, or it's not that. Where would that come from?
Well, what I would say
I'm not
is that-
asking you specifically, I'm asking.
I would
for-
say it would come out of the health insurance fund, and we'd have some sort of an agreement with that employee that, for example, if say it happens, I sign up, to begin July 1. July 4, well, let's see, let's talk this out. If we started July 1, the paycheck before July 1 would actually have any withholding I would have that would go to HSA, and it would have the boards, or not the board, but Kossuth County up to 100 included in that. Would that be, or would that come at the,
Well, our payroll's going to be, what, the 19th of June, well, for some, I mean, it's all over. Some of that's too, when we start to switch to bi-weekly payroll, we're also talking about those contributions. I'm assuming if it's up to 100, every 2 weeks you'd match whatever that half is or whatever.
Well,
Or up
but
to,
somewhere
up to.
the first,
What are you saying?
you have extra pay periods in there.
Well,
just
yeah,
what
you would do
numbers
the
are.
24, you wouldn't do the 26, you wouldn't have withholdings.
Yeah.
But in theory, it'd be 24 up to a half, up to that 100.
so whatever, there's that month, day 0, and if on day 4, I have some sort of extreme thing, if the county would want to have the ability to loan an employee money there, they would be giving them the 120, or excuse me, 1,200, but then the rest of the year, they wouldn't be giving them anything. It'd just be there.
So I agree that, there is an opportunity for us to do something with that. However, I would argue that doing that front loading, their HSA account might not be the right option, because if you think about it, if someone chooses not to contribute, say they only contribute $50, well, we would only be contributing $50. So if we front load that 1,200 to their account, but then they choose not to contribute, then we've overdone what we said we would do, because if we're doing a matching fund up to $1,200 for the year, and then they choose to not match, well, we did a match on what they didn't, so then that kind of becomes
have it outlined in an agreement.
That would,
Yeah.
but there's also, the only way they could change would be for some sort of a
Qualifying event.
qualifying event. They would not just be able to say a month, I'm gonna change my withholding. And it's gotta be clear, and I think it is clear, that Kossuth County's contribution is gonna be matching up to $100. So as an employee, that employee is required, in order to get $100, is required to put $100 in.
Yep.
If they choose to only go 50, then
It would only be
county
600.
would only be 50, and so $600 would be the dollar amount we would be talking.
So basically, you wanna limit this help to 12 months worth of county match,
Yes,
even though their exposure, and I forget already what their exposure is, our
68,
6,800.
well, that's
For a
the
family.
deductible for family.
34 for.
34.
Yeah.
So are you thinking of doing this just the first year, or are you thinking of doing this every year?
Well, if we put it in a policy, it could be a yearly thing, you know. So we'll have new employees and so if we did it just this year, the next year we hire a new employee, which we're likely to do, you know, then they'd lose out on that option because that already took place, so it'd have to be a policy that, you know.
Right,
we can do for
that would have to be
employees.
part of the discussion that if you have whatever a certain percentage of your deductible in your HSA, which I think is possible, is very possible to have within 2 years. That 6,800. I believe that anyway. So
And
if you have that, now, that's of course if you are not, if you don't have any kind of an event or you aren't clearing it out or whatever.
And or if you don't use it for every
Correct.
little claim that comes
Yeah.
along, and there are no little claims anymore, I mean.
And so
I know that, I have to say that before I get.
preface my statement by saying, if you don't use it, you would have it.
Right.
Well, I really like the idea of front loading it, I think that's a great idea, honestly, I do, I think that's a really nice act of good faith on our part, you know, right? I think that would be great.
who's gonna monitor this, who's gonna handle this?
Yeah, cause when I
You
brought
mean
that up,
front
that
load?
was the
Yeah.
first thing that was mentioned.
Well, I mean, you're gonna be front loaded the amount that you put in.
And that would be for every employee
Or events.
or a special event, we would
Oh,
just,
I don't know.
I would say a special event.
Sorry, I was thinking for the people who sign up for it as just an act of good faith to get it started because it's new.
You're saying even if, like, if I wouldn't need it for my healthcare costs, but I could still sign up for it just because of change in plans? Or,
No, I'm just saying like if, okay, so I decide I'm gonna, I don't know if I can do this, but I'm gonna do the high deductible plan, cause Kossuth County said they're gonna front load their portion, and I'm gonna give $100 a month, say. So I know that starting off, if something happens, I've got $1,200 in there to start me off. I was just thinking just the first year, but I don't know. Maybe I'm being totally crazy for thinking that, but I don't know, I just thought as a, then they might not, well, it might be a bigger encouragement for people to put money in there. And then they might not worry so much about the burden. Because I have heard talk that people are like, well, what other choice do I have? I mean, that's the only thing that makes sense with the way things are changing on the more traditional plan. And so, but they're worried about their costs in the beginning, you know, just trying to get that built. This would help them build that.
Well, I would think from an administrative side, if you just front loaded everybody that signs up for an HSA, you just front load them a year's worth of the contribution that we were planning. Maybe you forget about the match, maybe you just do it across the board and say that's what we're starting with for the first year's worth of contribution, and then, you can do a $100 a month match from there on out or something, I don't know, I think the more complex you make it, the more difficult the administration side of it is.
Well, and my fear is this first year, because Melissa's gonna be switching from monthly payroll to
Payroll.
bi-weekly. We have
Yeah.
no support from Solutions, we're going into this kind of blind, we're getting help from other counties, but she's already got that. She's gonna have to enter all that information, and then you add this on top of it. I just don't want it to be overcomplicated and, get ourselves into a,
But the
Yeah.
thing is,
Complicated mess.
we're already talking about giving, so she would be doing it anyway. We're already talking about doing matching, so she's
Are
gonna
you
put
talking,
that
would it
in.
be easier, Tammy, to do it in a lump sum once?
that's a question we'd have to ask her, and I don't think she knows the answer to these questions yet, because we haven't done anything with it before. So, until we figure out what bank we're gonna use and how that's all gonna work, I don't know that we have the answers to those questions.
I would think one lump sum with all the other changes that we're working on right now would be easier to implement, I mean,
I don't agree with that. I mean, yes, it'd be nice to have a one lump sum, do that all right off the bat and get it done with. But then if you've got people that leave in the middle of the year, then you gotta figure out where their account is, do they need to pay back, the last 6 months of that lump sum or whatever, because that hits their account and they don't pay that back. Now, if we do like with an event, we at least have some agreement saying that we're gonna give you a year's worth of your match. But you sign that agreement saying that if you leave employment before then, that you are responsible for paying that back. But if you do that lump sum for all county employees, and then you've got one person that leaves after 3 months, then you got another person that leaves after 6 months, then you got another person that leaves after 9 months, that's gonna be more of a nightmare for trying to figure out, okay, well, we need to get this much back from this person, this much back from this person, this much back from this person. As opposed to just starting it out, everybody signs up for what they wanna do for their match, and you just start doing that process. Then when an event happens, then you have that option to do that lump sum for that one person. Then you're only tracking one person, or 2 or 3 or 4 versus, 60, whatever, plus, accounts could be out there. So I think that would make it cleaner. Also, if we do that option where we say we're gonna offer, lump sum for a catastrophic event, if no catastrophic events happen, they're already making their contribution to their HSA, they're building that fund. Maybe they don't need it, maybe they build enough up in there that they don't need to do that lump sum, catastrophic payout, to their HSA. And then you just bypass the whole issue altogether.
so what would we set as a trigger or a defining thing that would be a catastrophic event? Cause $1,200 in medical bills, with the bills that you see today,
It don't take much to get there.
yeah, I mean,
Well, when Kaylee cut her finger and took her to get stitches, that was $1,500. Was that a catastrophic event? I don't know,
Right.
like, you know what I mean,
yeah,
like.
that's the question I'm
Yeah.
asking,
Yeah,
But even if we front loaded and someone leaves and 9 months into it, so they actually would owe us 3 months of that, that would come off their last paycheck. I mean, they would have to pay that back.
right,
Right, depending on when the pay period time happens and everything, if, we end up front loading them 1,200 and then they leave suddenly and then they don't have enough on their last paycheck to pay back the remaining amount that they owe back, then what,
oh, I'm not an expert in it, but there's limits on what you can withhold from a employee's final paycheck.
Yep.
So I don't know how all that would play out.
The county just eat the rest of that, the taxpayers would eat the rest of that, I mean, it seems like a small amount, but.
That's where it gets more complicated.
Yeah. That's why I think not doing the lump sum, yes, it sounds nice doing the lump sum for all employees right off the bat, but that could make a nightmare for doing payroll later on in the years, we have employees leaving, new employees being hired, things like that, those changes make it harder to track.
Right, but how do you explain it? What is a catastrophic event? Probably not necessarily the event, but the amount. That makes it more catastrophic.
Well, it would be,
not
it would be an
exactly.
event that would cause a bill to be higher than what their,
Right, what's that amount, is
HSA
all I'm saying, yeah.
I would say anything
Or
emergent
higher
care,
than the deductible.
I would qualify it as like an emergent care, or anything like, an illness or something you have to go to the emergency room for, or like getting stitches, or, you know, things like that. Going for a normal checkup, and then, you know, having to do some additional tests or something like that, I don't know if I qualify that as, you know, a catastrophic.
Could you
There
put,
could be some
I-
fine line in there, because if someone goes and gets a test done and they find out that they have something, and all of a sudden they have to get more tests done, maybe that.
In an effort to try to get an answer, I think instead of trying to define what that event is, we should say whether or not we're going to come up with assistance to even help out with that. I mean, I believe, do you have that question, Donna?
Yes, it's in the new, I added that
Yeah,
since Friday.
but what is
What
the
is the
question
question?
we're trying to answer?
Oh, you're gonna have to make me dig, okay. The question that we added was, is there an option to help employees who experience a high health care need prior to accumulating an HSA fund to pay for those expenses?
So, yes or no, and if it's yes, what would it be?
I say yes, let's just at least determine that. Are we okay with yes, we want to do something, and then that way,
Good first step, yeah.
the first step, I mean, I say yes. Josh?
Okay.
Guys, what do you wanna do? Cause no use talking about it if we,
Well,
if they don't wanna do it.
Right.
I'll speak first if it'll
That's
help you
fine,
out,
right.
because I don't wanna take your thunder or anything.
You're not gonna take any of that.
This morning I was a guest and I didn't think we needed to be in the business. I thought that, you know, we've got these great employees all the time, these great employees should be able to manage their finances, especially with in theory, that, you know, they should probably be putting $400 a month into into their health savings account, because if they weren't, they'd be putting it into if they weren't doing if they weren't doing the high deductible plan, it would be costing them $400 a month out of their paycheck
In premiums.
in premiums. Now, okay, I said that, my theory, I guess what I would be agreeable to now would be, let's set up something, and I don't think we try to define it whatsoever as what an event is. If you need to borrow money to cover your things, we'll loan you up to X, whatever X is. If we're 9 months into the year, you know, is it only $300 or is it up to $1,200 anytime? I don't know. And have them sign a note and move on and instead of trying to define everything.
Well, I don't know if
So
it
you're
would
saying yes.
necessarily,
I think that's a yes,
Well,
a form of yes.
and it could vary too, it doesn't have to be the 1,200, because like, me and Doug were saying, if an employee decides that they're gonna put 50 in, well, then if you give them that year, then it'll only be 600.
right, I caught Amber's point, let's decide yes first. I could go along with it, I guess, but I do assert yes, okay.
Carter,
Yeah,
you
that's
or
fine,
me?
I go along with it too, that's fine, yeah. No,
I'm not opposed to that, I think we
Well-
gotta make something that's easy to be understood, and that the whole process is kind of thought through, so that we're not making more of a headache than a benefit. But at the same token, I also think it should be limited in size and scope, and I would say whatever we do should be on a 1 or 2 year time frame. Obviously that could change at any point, but my initial gut reaction would be that it should be something more so confined to the county's transition and new offering of health insurance plan rather than some long-term commitment.
Well, we answered that one, so then
You need an amount.
we need an
Then what
amount,
does it look like?
right.
Yeah.
Could you do, just an idea,
sure.
what's the new deductible gonna be for standard plan now? 15 and 3?
15 and 3, yeah.
Could you do, since that, those employees would be paying that deductible, could you do anything over that? I mean, up to $1,200, but if they get a bill or any of their deductible over that amount, you could loan them the 1,200, am I making sense?
But then you're saying to do that for all employees or just for the ones on?
I'm saying like, if you wanted to do a catastrophic event,
Well, a catastrophic event available to every employee regardless of the plan?
I'm just
Oh.
saying for the high deductible plan, if somebody has a catastrophic event of over $1,500, cause that would be the deductible for a standard plan, then you could loan them or give them however you want, $1,200. Does that make sense? Am I making any sense?
Oh,
I
you're
understand.
defining the deductible of the,
Right.
of the standard plan as a catastrophic
Because
threshold.
had they
Yes.
chose to stay with
Okay.
that,
Yes.
they would only be paying that.
Correct, yes,
For July 1, we're gonna have an open enrollment.
cause then now you have them, go ahead, sorry.
The idea was front loading the county's contribution.
Right, that's what I'm saying,
Which would be like,
Yeah,
$1,200.
but again, it's not gonna be 1,200, if they're not choosing to contribute $100 a month to their HSA, to where we match it $100 a month for their HSA, then it wouldn't be 1,200.
So you're saying don't have a set amount?
Don't have a set amount, say that we are willing to, in a catastrophic event or need, that we will pay out 12 months of our contribution to your HSA. Matching contribution, so if they contributed $75, then we would be contributing, great, now I just set myself up for that.
Yeah.
Then we would do $900 lump sum, and so we just set that policy to what their match, what our matching would be. So if they do, like what, Howard was saying, 400 a month in their HSA, well then we could do the 1,200 because they're over the matching, so we'd be matching that. So I think it should be set, not a dollar amount, but our
A
12 months
year's worth.
worth of our
Yeah.
match.
Okay, that makes sense.
Okay, yeah. You have a
I
thought,
don't know if
Donna?
I can phrase this accurately, but while we were meeting, Kathy Clark from Health Equity did ask the questions with FSA. And her question was, are we going to keep the calendar year versus the fiscal year? Because currently our flex is on a fiscal year, or calendar year. But now we're starting this, so in theory, we're talking about 6 months
right,
of if you had a catastrophic, and that's if you haven't had anything to aggregate and pull forward from the first 6 months.
gotcha.
Yeah,
And
that's,
then we're starting again in January, so I mean, there's just a lot of, and we've never really discussed if we were going to have a second open enrollment period in January, or second opportunity for open enrollment.
We gotta get her past this one first.
I know, but it kind of plays in, I agree, it kind of plays into all of it, it plays into a lot of moving things, because we're talking about certain things for 6
To
months.
be fair to employees, I think we have to offer a second one so that they know that there's an option to switch now or to switch in 6 months.
Right.
To line up with the calendar year. If they've already maxed out their deductible for this year, then it might not make sense.
They probably won't have maxed it out when we start the new, cause there'll be a little growth from last year's plan to this year's plan, so there's a little bit.
Yeah, I mean, all
But
those
then
factors
the
would play in,
flex-
but
yeah.
if they currently maxed out
Right.
for the current numbers. Yeah, I mean, and that's where you look at your individual situation, but I think to have the most flexibility we can for employees and give the opportunity, I think we have to offer a second one to do our due diligence, I guess.
Just having. So if you did the catastrophic event for the 6 months, but then in January with those individual, I mean, that's,
I would say catastrophic,
or
if we have to do like a catastrophic lump sum, just make it 12 months, and then that way you have, so when you do that payout, then then the county does not make a contribution for another 12 months. At the start of that, county does not make any matching contributions until that 12 months is up. And once that 12 months is up, then the
as
county
long
goes
as
back to
you're
making
enrolled
the
in the high
contributions.
deductible plan.
So then that way, if you get 3 months into the year, catastrophic event happens, you can sign that agreement, get a full 12 months worth, instead of just 9 months. You get the full 12 months worth, and then once that 12 months is done, then it goes back to just normal.
In that example, there will be an open enrollment period that all employees will go through. And that open enrollment period allows employees to change their options.
But if they have an HSA account, their HSA account doesn't just vanish as soon as they switch to the standard plan.
No, but if they choose to do something different, they have the ability to do that.
And then at that point, then you'd need to have something in the agreement saying that they need to pay back.
I'm just saying,
Yeah.
that's
Yeah, no,
fine.
that makes sense.
I
That
am
makes
just
sense.
saying that every 12 months, there is an open enrollment period.
Yep.
Yeah.
So just another question. So when somebody has a catastrophic event and needs this, where do they go? How do they get this started? How does that work?
There's gonna have to be some sort of a policy written that has all this. So,
They're gonna come to your.
The devil's in the details.
Yeah, is it,
HR,
I mean, it's somewhat, it's not the exact,
first thing we need to do is talk to Melissa to see from a payroll standpoint, withholding and how much work it would create for payroll to all of a sudden advance a larger match and then stop it for the next time period, whatever that time period is.
are we advance it through payroll or similar to when we used to do the deductible payback?
Keeping track of all
With the
that.
plan?
Yeah, it's giving me a headache.
What I
It's
suggest.
easier just
Oh, I
Just
just
write
wanted
it.
to.
I can't write it.
It's giving me a
one
headache.
time.
No, I got
You see
it.
what I'm saying?
Right,
This is
has
the
to
problem
do a
with
claim to the
The
agency
devil's in the
versus
details
payroll.
because there's 100 different rabbit holes you can go down. We could spend the next week talking about this without leaving the boardroom.
So we would.
I think it
We
would.
weren't
county
doing
would-
pay, but they're still gonna have to adjust the payroll, so yeah, so I guess it wouldn't.
At least the
payroll's still
first
gonna have
year,
to be-
maybe that would be the easier.
And that's it.
I think you just start with something for the first year and call it a day, because any new employee coming in, they know the options for health insurance when they start. It's not a transition, it's just a new beginning for that situation. Whether they're coming from a previous employer that had better or worse coverage or no coverage at all or whatever, it'd just be a new start for a new employee. So I guess the only thing I'd suggest is something right now for transition for current employees. But if you front loaded, if you forget the match and don't have to worry about paperwork there, and just front load $1,200 to everybody's HSA for this year's contribution, call it a day, be done and over with.
Regardless of what day plan I'm putting in.
I mean, we already
I'm
are.
fine, I'm just
Yeah.
making sure I
And then next
understand.
year,
From
the match.
a financial perspective, for me, looking at it from a taxpayer's standpoint, switching to the other plan is already planning on that cost savings. So from a total expense picture, we already kind of have that budgeted in as an expense if people contribute. Well, if they don't contribute, whatever, we're still gonna save on the premium side of things of what we're paying towards Walmart, so.
I mean, I think
I
that's a
guess.
good incentive for employees.
The only problem I have with that though is if employee A decides they wanna contribute $50 a month to that, and then employee B decides they wanna contribute $100 a month, but you give them both the same lump sum at the start, then
But at the end of the day, what does it really matter? From our cost for a healthcare standpoint in premiums, the employee's balance in an HSA has no impact on what we pay in premium or what they pay in premium. It's their personal financial management and personal budget decisions. If they put it into an HSA, it's an advantage to them because it's pre-tax dollars and they can spend it on healthcare costs. If they don't put it into an HSA and they pay healthcare costs with post-tax dollars, that's inefficient, but it's their own choice. So
you're
I guess
saying
I would just forget
lump sum
that stuff and
just to their paycheck and they choose what to do with it
first
versus,
paycheck in the new fiscal year, write a check for $1,200 to everyone that signs up for the high deductible plan and call it a day.
Can I ask this, like, okay, so, say in July, I decide I'm gonna give $100 a month to my HSA. When can I change that? Can I change that at any time, like, could I,
Qualifying event.
a qualifying event, so I can't change
open
that
enrollment.
unless, or open enrollment, so once that's set, it's set.
That's
Yes.
my understanding.
Okay, gotcha, and I think we did talk about that, but my brain's just kinda spinning.
The amount you're contributing to your HSA can't be changed?
That you're gonna match, but I don't, I mean, you can put up to, but
I
you're
think,
like.
I think you could change your payroll
That's,
stuff at
yeah,
any point in time.
I'm just talking about what
Your
I
health-
get.
You could put more in or less in, but you guys are setting the you'll.
No, I'm talking about me, myself,
Yeah.
me,
I think
myself.
you should change that every 2
I
weeks
think
if
I
you
changed-
wanted.
Okay,
that.
so there's gonna be some paperwork anyway, if people, there's gonna be some of that anyway that goes along with payroll. So if we keep our county part pretty, that's stable, we're not changing that. There's always gonna be those issues,
Well, I'm gonna-
like Melissa's probably gonna have
Payroll,
changes
like,
no matter what, you know what I'm saying?
No, probably no different than if you update your bank account, you
Or
can
your
fill out a new piece of
IRA,
paper.
or your, you know what I mean, there's always those things. So. Moral of the story is I'm okay with front loading it, but maybe a year's too much, maybe you do 6 months, I don't know.
Howard's got a thought and he needs to go.
I'm gonna leave, yeah.
Oh, okay, sorry.
I'll be back at 3 if you're still here, I think.
We'll be back at 4.
I would think you could change your contribution to your HSA, but
I would
my,
say
my
what our
question
match
was,
was.
how much I thought you alluded, maybe I'm dreaming this up, that since the first part of a calendar year is only 6 months, are we gonna be limited to how much we can put in that HSA in those 6 months?
You can put up, let me read
Is
that.
it
You can put the
prorated?
full amount, but if you have to say that you will stay, so if you put in the full amount of 4,400 or
Right?
50,
yeah,
whatever,
4,400
depending on your
for
age,
singles, 8,750 for family.
that's first 6 months, but then you have to stay in a high deductible plan for the 27 year.
But in 27, can I put another 8,800 in that calendar year?
I believe so.
So you think I can fully load it?
You could, but you have to stay within for that next year.
Next whole year.
Is that what you understood in that conversation?
So I'd go with the pre-funding it and don't worry about it, give them a head start. I wouldn't get into the weeds of defining a catastrophic event. I don't say it's gotta be, you guys can decide the amount and I'll support it. I think, the 100 rabbit holes is so true, that's my opinion. I'm sorry, I'm running out on you.
Well, I've
Thanks,
got,
Heather.
I've got somebody coming too, so I don't know.
That's okay, so
Yeah.
can we figure out, you wanna figure out a dollar amount? Let's at least cross that off our list, I'm okay with it, I'm okay, let's run. You guys okay good with that? Josh, I know you're kinda not, but can we sway you?
I mean, we talked about $100 a month 12 months is $1,200, that's, I guess, mentally,
I
I
might be
think
back
we were
too.
all on the same page of $1,200 would be our cost of the county, so I'd leave it at that and call it a day.
Or were we talking just that 6-month period, because then it wouldn't be 1,200, it'd only be 600. If you're talking that 6-month period, at $100 a month, if you're
Well,
talking
but
about just front load.
it doesn't have anything to do with time frame or whatever,
It's just-
it's your front load, you're switching to the plan, this is your incentive in the transition period, done.
Done,
That's-
done, like we're not gonna, no more, right?
Yeah.
Well, we'd have our matching,
You could still
just
contribute-
normally, right?
No, you could still contribute personally,
Af-
you would just forget the entire match, it would all be up front, done and over.
That's
Upfront,
why
done.
I'm thinking the 6 months, because then once we hit that open enrollment period, starting in January, then you start the whole matching.
Mm.
Because then,
But then if someone switches to the high deductible plan at the beginning of the fiscal year and something happens, they would have $600 instead of $1,200 to get through that time period. So it's
if they didn't contribute anything else.
correct, we're just talking about
We're
the
just talking
county's
about it.
contribution. But, I mean, we've talked about the financial difference to our self-insurance fund between the plans. I think we've hammered out the structure of that so many times. We've all beat the horse plenty, but at the end of the day, if you look at a 12-month period and you're gonna match, or forget the match, but we were planning to match $100 a month, comes out to $1,200, let's front load a year's worth and move on. And then it's one payroll, whether it's processed like a reimbursement claim or whatever, I don't know how Melissa would plug that in on the back end, but I think it'd be a lot simpler to plug in $1,200 times every employee that switches healthcare plans than it is to
Then our end's
keep
done.
track of who's matching and what they're contributing and whether they have a catastrophic event or not and what the terms of that are, it's just done and over with.
So then when they sign up,
Just
Right away,
deposit the account.
toss it
deposit the
in,
money.
gives
First
them
of
the
the new year.
$1,200,
Fiscal
do
year.
you still do the county match?
No, I would
No.
get rid of that.
So then you
It
start-
just replaces it entirely.
So you're saying no county match, we're just gonna,
We're gonna
Front
give you all of the match that we were planning for
For a
12-month
year.
period.
And then next year, we could start the match
Next
again.
year, yeah, do whatever
next
at
year
that
we
point,
could.
because that's a new
This- for
fiscal,
this-
that's a new budget year.
For this first year, it's done, and then the only thing that Melissa would have to change is if a person decides to contribute more on their end.
Yes,
and they have to go
individual employee
Individual,
choices.
then the county end is done.
Yep,
I get on board with that.
and that eliminates all the other rabbit holes that we could go down.
I
okay,
really,
so
really like
next
that.
question,
I
you
like
do
that
that for the
idea.
employees
As long as
that
Tammy
switch at
I
the
like
fiscal year,
Yes.
but what about those that switch at the open enrollment period at the beginning of the year?
Or
Calendar
like
year.
this fall, if we have another one, you mean?
Yeah,
Then maybe you do a 6-month front load because you get to the end of the budget year. So, I'm looking at it from a budget year time frame of we planned, anyone that goes to that plan, we would spend up to $100 a month in our budget year. So, if you wanna front load 6 months or 12 months worth of that, depending on when they sign up, I'd be fine with that too, but
so you're prorating that to
you're,
July 1st.
yeah, our
Mhm.
budget
Okay.
fiscal year that we're talking about. Yep, and then next budget cycle, next fiscal year, anything can be done and discussed during budget time and figure out where that lands. This would deal with the first transition period
Yeah.
within the same budget year, which is what we would have planned for.
And then if a person does have something, they know they've got that $1,200 in there.
Yep, it's done and over with.
Now, is that
Regardless.
$1,200 going to just go into their check, or is that gonna go to an HSA account?
Has to
I don't
go
know
to
how
an
that works.
HSA.
It's gonna go, yeah, it's gonna
It
go to
has
an
to go to
HSA, but I
HSA.
just don't know the logistics of that.
How does that
I,
affect their, so for the single, when they have the maximum of 440 or 4,400, does that affect?
4,400 or what?
Because
That's all.
they're yeah.
Yeah, that would be
The
a
IRS only
contribution.
allows you $4,400 a year for a single, or $8,750 for a family. You do that 1,200, that's gonna affect how much they can put
Well,
in for
that
the rest of the
that
year.
kinda goes back to what Howard was asking about, does that apply to calendar year 26 versus calendar year 27? And the answer is yes, so the employee would have to be cognizant of what the county's putting in, which honestly, if we front load all of it when they sign up, it would be simple, cause it'd be one number they'd have to figure in. But they would figure in $600 or $1,200, depending on when they sign up, which if they signed up into the beginning of 27, you wouldn't worry about it for 2026 anyway, I suppose. But, because it'd be paid in January of 27. But if they signed up at the change in the fiscal year, you would have $1,200 that the county would be contributing, and they would know that they could only contribute the difference of that within the rest of this calendar year for federal purposes. So,
It's
I
a
think-
lot. They probably wouldn't contribute, you know what I mean, that's,
Well,
they
then-
did, but it's
Yeah,
a
Yeah,
lot.
but if someone, like what Howard was saying, $400 a month that they wanna contribute, that adds up.
2,400, yeah.
yeah, but at the end of the day, I think the backside considerations of that an employee would make would be a lot easier to do if they knew that that was gonna land in their first paycheck of the new fiscal year, regardless of any other XYZ. It's just done and over with and set and forget it.
And then they can always alter how much they put in, like, you know, this
Yep.
first 6 months, they may not put in as much because there is that $1,200 of help. So then they can alter that when they know that, you know, then it's gonna change to
And
that.
maybe they wanna max out their contribution, so you do the math of what's
Yeah,
remaining and how
and they
many
might.
paychecks are left, and that's what you want taken out.
Yeah.
So,
They've got to look at it on their own individual basis, but we're just doing the front part to help out.
but I think
I like
it'd be
that idea.
simplified a lot for them to figure that out if we had one set number that was done and over with.
I think so too. Instead of trying to make rules and policies and this and
Yeah.
that, and then next
Well,
year
we're
this time, then
We'll
we,
spend more than $1,200, we're
We're
trying to
s-
figure out what
We're
the
still gonna
rules
have to
are.
have some level of policy in there, because if someone leaves after 3 months after we've paid out their contribution, how are we gonna handle that? Cause that was a contribution.
Well, I would say that's only eligible for current employees, and maybe that's a risk we have to take, I don't know. Because that's the current employees are the only ones that are actually transitioning, and I guess
Right.
that's what I said before, so.
and how many policies did you say we have, 133? Is that what you said?
Yes.
Insurance policies.
Yeah, times 1,200. It's
Right.
$159,600.
If everybody's.
If
If
everyone
everybody does
it.
do that.
If everybody does it, so I
And-
mean, it's $160,000.
And you're gonna pay
I
out
know
the
that's a lot,
same,
but it isn't.
but you're gonna pay out the same dollar amount over
Yeah.
the course of time
Yeah.
if they
You're gonna
match
pay it
or
out
whatever else, so it's not actually changing anything on the bottom line, it's just putting it on the front side.
It's just the timing,
And,
yeah.
yeah, it's the timing and we talked about our self-insurance fund balance, but it can handle that for the first year.
It can handle that for the
I
first
wouldn't
year.
be concerned about that at all. So,
I think it'll be okay too, I do.
and I still think
I
for
think so.
the taxpayers, it's still financially responsible for the plan options that we.
Well, I think it's important to realize that the self-insurance fund right now has had contributions from all employees. And it's not just taxpayers
Right,
it's not just property tax that goes into that.
that's right.
Road use tax, there's tipping fees from the transfer station. It's not
And
just
the
general
employees.
fund,
Yep,
it's not, and we've had employees, so it's important for our employees as well to realize that they have contributed to this fund,
yes,
and we need
Yeah.
to
that's very
be
good point.
responsible for that as well.
Yep, very good point.
I
Okay,
think we have a direction there.
I think we got that answer.
So we'll front load
Probably should have a
July
motion.
1 of 1,200 and front load January 1 of 600.
Yep,
And that's whether,
Just for within this coming budget year,
Yeah,
yep.
2027, January 1, 2027, July 1, 2026.
Yep,
And that's whether or not they are planning their own contribution of $100.
Right,
Like I
it's
s-
regardless,
yeah.
It's regardless.
regardless, but then next year, you know, that'll be different.
Yeah,
Cause and I
Well,
don't wanna repeat it,
if-
but,
if we would not be front loading, we would only be contributing up to whatever that
Right.
employee is contributing.
Right.
If they're not contributing $100.
but I guess then to
It might
evaluate that, you,
Encourage them
yeah, well, you'd have to weigh what's the odds that someone's gonna contribute less than $100 a month. And if you have any medical expenses at all, it'd be in your best interest to contribute something,
to, especially if they're
Because you
contributing
pre-tax
like
dollars.
$250 now,
for
right
family
now
plans, yeah.
currently, so it's like,
You could keep the same schedule or same rate and contribute that to your own HSA rather than into premium to the healthcare company.
But if people do not, they're still gonna receive the $100 per month.
But if they have health expenses, they're gonna pay their deductible, so, I
I'm
mean,
just
yeah.
saying that if the employee does not contribute $100 per month, they would still receive $100 per month.
Yes.
they would,
Yeah.
this right now, yes.
it's just a front load. Simple and clean.
How they wanna plan for the future, I guess, would be,
It's just
their
assisting them
decision.
in the, you know, the
The
transition, which I think is, that makes me feel pretty good,
It's very nice.
yes, I do, I think that that is a nice gesture, it makes me feel better about this altogether.
How about a vendor for the HSA then?
Do we want a motion on that so that we have some record of it, or,
I mean,
It's up to you.
we're
Well-
making decisions, it's on here, but.
yeah,
I
it
think-
is on the agenda for
I think it's a
decision.
policy that needs to be written, and if we can tell the people that this is what we're gonna do.
But do you want something to reference for a formal action of the board when we get to the open enrollment meetings? I mean, we could say it was voted on March 17th and this was,
And,
A
and
motion
further
vote.
policy will be brought before the board.
yeah, I mean, I'm just saying it would put a little bit more meaning behind it maybe.
What, can a policy be done by next Tuesday, so it's all in a policy before the meeting? I don't know. How fast can a policy be done?
There's a few things that, you know, I don't know that I'm thinking of right now that, so, and are we having a department head meeting Thursday? So I wanna be able to kind of go through the whole procedure, with the department heads, and they may bring up more and more questions. So,
But I don't think it'll change our decision today.
no, I think,
That, I think is
Yeah.
established.
I think what you
no
have
matter what they say.
decided there, as long as you stay with that, is good right now. And
Okay,
we can certainly, I think there's a lot of things on the high deductible health plan that need to be worked through, not just to make sure that we can get
Sorry.
get the payroll deductions
I-
going, so we got a lot of work ahead of us. And we, the auditor's office, human resource, so.
well,
any other questions you need answers to today?
yeah,
HSA vendor,
the-
Oh, that's right, HSA.
do you wanna stay local, or would you like to go to that health equity? Or do you wanna think about it?
So what would be, help me think this through, the advantage of doing health equity versus local, is it because of the fees? Or meaning not advantage of health equity over, is there,
I don't know.
Yeah,
there's.
What would be the disadvantage
sounded
of being
like a
local?
significant
Yeah.
expense.
Well, I mean, if you go local, you got less fees and you're also investing in your
Community.
local community. I mean, you're keeping it right here in Kossuth
Yeah.
County. I think taxpayers would appreciate that, our money's staying local.
Yeah,
I'm cool with that.
I
mean, I don't,
Okay,
I don't.
which one do you wanna,
What's our
which one are,
choices?
which local do you wanna go with, and, or how are you going to determine that?
I think Kyle brought up Fidelity, is that the right one?
yeah, Fidelity and Bancroft.
Let's get some definite answers from them, you know, see if we can
So
get.
I just read off my
Well-
notes, but I did get a little handout, emailed to me from them yesterday afternoon, I think.
There are a number of
But,
lending institutions in Kossuth County, and how are you going to,
Decide
how are
which
you
one.
going to,
Say this
I
is the
sig-
one.
I suggested
okay,
looking at
so
all of them before,
is-
and that wasn't.
I'm just asking, is Iowa State Bank one?
Mm-hmm,
well, we
Just
can,
because isn't that where we do a lot of our banking at?
yes.
What's their cost?
I don't know. That's the only reason why I'm bringing that up. We have stuff there already. Would
That's
that be a
something
good
to look
option?
into, yeah.
No, he has the we have all that,
Oh, you do?
yes,
Donna does.
yeah,
Donna's done a
yes,
lot
we
of
have
that.
all that.
Okay, so we need to see how they
costs of
compare
each
and,
bank here locally.
Yeah, not each one, we have it from Iowa
Northwest
State and
and-
Northwest.
And it's dependent on different things.
Yeah, like, I have it in my notes here.
If you have a bank account there, then there's no fees for your
correct,
HSA,
yeah.
things like that, but.
Yeah,
I thought Farmers State Bank had one too. 'Cause when I
I'd be
open my-
surprised if they do not.
When I,
I bet they
open
do.
up my online banking, it comes up something with HSA, so I
Yeah.
never really read it, but.
I guess I did research where I had already previously asked questions and shared the handout with everybody, but I read off I guess, the important information that I had wrote down in notes, but I think paying for a box of checks is pretty common if you have a checking account, and other than that, there really was no fees.
I do not have to buy checks.
You don't buy checks at all?
I do not have to. They're provided by my lending institution.
Some do, yeah.
Well,
some
there
people
is,
like-
there is a bill pay option that you can put in the
No, I'm just
information
saying,
of who you're paying,
I'm
and they
just-
will send a check.
There's
and
variables
that's
between
free.
each
I'm
institution.
just saying that
Yeah,
I have a checking account and my bank does not charge me for checks. That's all I'm saying.
okay, so
And I have a bill paying option with them as well. So,
Iowa State Bank HSA has a $20 annual fee, whether you have an account there or not, and I think it's like 0.24% interest. Northwest Bank, no fee if you have an account there. If you don't, it's $3 a month, be $36 a year. And then 0.25% interest.
0.25.
Or is it 2.5%, is that what it is? I can't
yeah,
remember,
it's
we have
like
to check.
2.5.
No, I think it's we have to check with Donna, she has the interest amounts, but.
0.25 would make sense.
Well,
Yeah, 2.5, there.
She's back.
We were talking a little bit about HSA vendors, and Tammy just talked about Iowa State Bank. Go ahead and, you wanna repeat it, Tammy?
Yeah.
20
Iowa State Bank annual fee, $20, annually, this is to the employee, and 0.24% interest. And then Northwest Bank, $3 a month, if you don't have an account, if you do, there's no fee, interest 0.25%.
I was gonna try and clarify too.
Probably the
the
most
contribution.
appropriate thing, if you're talking about going local and you're talking about including a bunch of banks, is ask for a request for quotes from those banks so that they can put things in
Yeah.
writing.
Yeah, so we have all of them.
I guess that would have been something that would have made sense when I asked that question previously, when we were talking about banks, but
Northwest Federal does have a printout that's included in that, and then I did do a request for proposal, I just talked to his customer service person.
I don't know how we're gonna do a RFP and get a decision made next Tuesday.
Well, if we say that it's gonna be a local bank, I think that that would be, it's gonna be one vendor and it's gonna be a local bank. I think that would answer the question for our informational meeting, would that be correct, Donna?
I think so. I think that's what people are kind of wanting, that we're gonna stick with a
One.
bank,
One.
just for payroll.
But it's gonna be one vendor.
One vendor for everyone, yes. So we wouldn't necessarily have to tell them who that vendor is at this time. We just know it's gonna be one vendor, whichever is the best. I think that's fair to do that when, you know, we've got multiple local banks
Yeah.
that do it. I think that's fair. And maybe they just have something real simple they can print off and maybe we could put it on the agenda.
I'm sure it's not the
I mean-
first time that they've done that,
Yeah, I mean, maybe it's just something they
yeah.
have readily available.
Okay.
Besides fee and interest, is there other
Criteria.
information that the board would like to have answered as far as a vendor for that?
And
To
they,
me, if I have a HSA as an employee, I would like to be able to get to a certain balance and then have the option of moving that into a higher interest type HSA account.
yeah, okay.
That's as an employee. I don't know if the board would like to have that question answered also.
Why not? What's it hurt to answer the question? I mean,
I think it's valuable to consider, but it depends on how in the weeds we're gonna get. I mean, are we gonna do something simple so that we get it set up and it's as smooth and easy a transition as possible? Or are we going to try to analyze every nut and bolt of the equation so that we get the best option? Because
As an employer, you do not have to worry about those types of decisions, that's the employee's option. And if you want to make it favorable, you've got to allow the employee to do some things with their HSA.
And that-
right, and I'd agree with that, but also I think the most favorable thing would be allowing them to set up an HSA wherever they wanted. Because I think you can do that. I don't know the payroll side of things. I guess there's a lot of that aspect, but
I believe, Tammy, and correct me if I'm wrong, Palo Alto County, Pocahontas County, Wright County, there's multiple counties and they do not,
They all have one bank.
yes, they all have one vendor.
I think that question, you know, would be good just to have,
Yeah.
just to explain to the employees, not necessarily because it has anything to do with us, like Doug said, that's the employee's choice. But here, this is the one vendor, here's what you can do. I think it's okay, it's just giving them more information, what they can do on their own. Basically, if they wanna transfer money like that to a higher interest.
And then, I mean, if I go talk to a tax professional, there may be more ways that I can contribute personally to an HSA than
Right.
what we're talking about in this room right here.
and there may be ways where they could have it deposited in one bank account and transfer it or move it or whatever and use it for investment purposes elsewhere. I don't know all the rules behind that or how that needs to flow, but
I think if you want it pre-taxed, payroll deduction, there's a way employers can do that. There's also ways that employees or small businesses, small business people can do it. I would think anyway, but that's, you're gonna have to talk to a tax professional about that. So,
Okay, so we're gonna get
Yeah, I have nothing to add to it.
RFPs and,
To all local banks in Kossuth County or to the ones we just discussed?
well, if
We're
if the issue is local banks, we should ask all of the local banks. in Kossuth
I think I had the list of those that we have depositories with. There's 1, 2, 3, 4, 5, 6, 7, 8. I don't know. Some of, not all banks are on that list.
Yeah, I don't know if that would have all of them
Is Fidelity also, is that ledgered?
or not.
What are they done?
What, the depositories
They're
are,
just bankrupt?
No, it's not just
I'm
Bancroft.
assuming
Oh.
Security
There's
State
like
Bank,
30.
Inter-county.
Fidelity
County
Bank.
would just
Oh, it
be
is.
Bancroft.
Oh.
They
Oh,
just
no,
bought
what state
rates
bank?
in
What is
another
state
one
bank?
north
Okay.
though.
Farmer State?
That's one up in
Farmer
No.
State Bank's here and in Livermore.
It says Farmer State, I don't know what state bank is,
State
Bank Algona. Fidelity Bank and Trust Bancroft, Security State Bank Algona, Farmers and Trust Savings Bank Lakota,
That's
Bank
what it is.
Plus Way City, Farmers State Bank Algona, Northwest Bank Algona, and West Iowa Bank, West Bend.
Maybe that does have all of them.
What's TBC now?
Oh, no,
Sounds like
NSB.
all.
just type.
NSB.
NSB.
Yeah, I was gonna say tight for sure, and. Let's-
Fenton, where do they?
I don't know what Fenton is.
Well,
What's
but
Fenton?
some of them, like Laverne, I mean, yeah, we're Security State, but it's Security
Oh, so it's
outside
a-
of
it's a-
Algona. Yeah.
branch off,
Yeah.
It's
West
a branch
End
off,
branch.
yeah.
Right,
Right, of Iowa State.
right, right.
Yeah.
Same as Wesley or, yeah.
Yeah,
Look,
West Iowa Bank is in Fenton.
That's West Iowa.
West Iowa.
West Iowa and it's West Bend and then, is it West Iowa?
There's a branch here in town.
West Iowa's here too, yeah.
Yeah.
Right in East Pond Street.
Credit union?
I guess,
what's that?
I guess
Well,
they're,
no.
Credit union.
Well, yeah,
yeah, Citizens Community Credit Union.
yeah, I
I mean,
suppose.
Could be,
I
I
suppose.
mean,
see what they got.
Well, if I miss anybody else, I don't. That's,
wouldn't think
Yeah.
about it, I don't think so. Since
Bank of America's
Kansas,
gone.
State, Iowa State,
Mhm.
Midwest Federal.
I mean, there'd be
West
bigger
Iowa.
regional banks that would cover the area, but I don't know if
They don't
they
have locations,
here.
yeah. Right.
Like, yeah, you'd have US Bank, you'd
Wells
have,
Fargo, all those, yeah.
Yeah.
We don't have,
they don't have locations here though.
Security State Bank.
Yeah,
Yeah, we got that. I think they're covered.
well, thank you for
What-
taking
what's Sway
initiative to
City?
do that, Dharma,
Okay.
appreciate it.
That's what's in Ledger, Bank Plus.
Huh?
Yeah,
Basically,
did you,
Right on.
Donna,
Titanca,
Oh,
yeah.
July
Donna,
Good.
Bank Plus?
I think that was on.
Oh, that
the
was on
list.
there, oh, okay, alright,
Through Troy City, I think.
okay, but then we got everybody, okay.
We're gonna front load 1,200 on July 1, 600 January.
Oh.
And then we got local.
The 600 on January one would only be if they just signed up.
Oh, okay.
It's
I was like, oh.
not both.
That's why you, I was like, oh.
I saw the excitement, I wanted to.
Not
see
excitement,
that.
whatever, I was like, oh, I wasn't expecting it, it wasn't excitement, yes, I just wasn't
It's
expecting.
the equivalent of the max of what we would have paid over the budget year if someone switched.
Yeah, no, I was just saying, I wouldn't have expected it, so that's why I was like, oh.
Yeah, no, it's just a prorated piece if someone switched it to the calendar year.
One more thing, I'm trying to look to,
Well, got most of that answered then, for today.
Was there any other questions? Well, I'd like to ask, okay, so how are we planning on attending these, guys? Are we gonna, make sure that someone's supervisors that are at every single one, probably not all of us at every single one, but,
Right,
I
Probably
think as
should
many
list.
as can be, I think that will show just support of,
yeah.
Tammy, you wanna list all of them on our agenda?
I'll,
Yeah,
when I
I
go out
will.
over there,
Yeah.
I'll look at my calendar
I
and
think
I'll
I put them on my calendar so I wouldn't forget. Let me double check.
get to as many as I can.
Yeah, just
Yeah.
in case there's more than 2 of us at one.
I
though.
did. I had put attend insurance meetings at Nature Center for the 25th, 10, 1:30, and 5. And then on the 31st,
1 and 3. And then
1, 3, and 6 o'clock question mark.
Yeah.
So, and that's at the
I-
election
I
center.
hope the question mark.
I have a better chance of being there the 25th, so we're due the 30th, so I'm not gonna make promises.
Yeah. You may not even make it the 25th.
I may not even make it the
or you
25th.
could go to April.
We could go,
Bulls, it happens.
yeah,
Yeah, Donna knows.
just don't tell my wife that.
She doesn't wanna talk to me.
Yeah. But, okay, anything else then for insurance? Or have we about covered that for today?
Okay, other than was the question,
Oh, yeah, Donna left, so,
what?
are you talking about the question of what we're gonna do as far as?
No, I think I caught up at the question, or the FSA,
Oh,
that just came.
Flex
Sorry,
spending account.
and I just
don't
need
understand
to,
how
We're
that
gonna talk to,
transition is, I don't know.
what we're thinking, and I don't know if I know how to even answer it. Thank you for sharing the questions for the upcoming
That's what I was
meetings.
in.
I'd like to clarify whether the FSA plan year will shift to match the new HSA schedule starting July 1st, 2026, or remain on the current calendar. This affects how staff use their FSA if they move to the HSA option. I had.
that was your question?
That was what Kathy's asking us from Health Equity. I guess my response is probably tell us what you think or what, you know,
Yeah,
cause I think
don't
that's,
honestly know.
I know, and that's why I said it.
I can't make
I
an
hadn't thought
educated
of
answer.
that either. But I can see where it's relevant. If it's terminating, in theory, that'd be a qualifying event.
Could they put that money from?
And I'll ask
FSA
that
into
too.
HSA, like if they, I mean,
I'll ask that question, but we don't have, I guess right now, we don't have an opinion on what this question is. We'll ask for some guidance, and then if there's an option to transfer what's in the FSA to an HSA.
sounds good.
Okay.
Yeah.
Didn't that
Sounds
Nate,
good.
didn't he say that you
They don't,
could
they
not,
don't work well together,
you
is what I
can't,
wrote
you
down.
cannot transfer money
You
from,
can't transfer?
from, I thought he said
I
that,
just know, I wrote
But you
down
can-
that they don't get along.
but you can,
Yeah, I know you can't have both, you
They're
cannot
not
have
friends.
one.
They don't get along.
Yeah.
And he
That's what
basically
she
said,
said. Somebody said that.
you need to exhaust FSA is what I had. But then he talked about the rollover that we needed to clarify with our agent, which then was the 60 days. But all of that's kind of
But it-
clouded in the background.
if you did, if you switched it over to was it a dedicated FSA? I mean, there's a
Limited.
limit,
Limited, I think you could roll it
So-
over to a limited.
which you could use for dental, vision, and everything would be under the
Not answering.
rollover. You could still use the FSA for that. You just would not be able to use it for health.
Health. Okay.
Okay,
But the best thing to do is exhaust all FSA funds
With the-
prior to. That is the best way to do it.
But they have until September.
Well, I don't know, that's what we said, that's what our termination is if you were to end, to submit things. But I would interpret, if I was really, that you have to have it approved before July 1st, but that
Yeah.
you can submit it within that 60 days.
Okay,
Right.
So there's a lot, you know, I think employees need to be kind of aware of that. you know, and I don't know that people wanna buy several $100s worth of Band-Aids. Or, you know, I mean, allowable expenses, I think that would be kind of,
Selling with a black mark. Isn't that what we're talking about?
I think so.
Okay. Thank you both.
Yes, thank you.
Yep. Okay, we'll go to board discussion then. Donna, don't go too far. I just said Donna, don't go too far.
Oh, okay, I won't go too far, I'll just.
What?
Go ahead, Josh.
So I had, 9 o'clock at board of directors meeting, last Monday. We got our audit report from Ford and Schlegel. I have that report if anybody wants to look through it, it's pretty long and extensive. Similar findings, you know, segregation of duties and stuff, the same things we get here. They did know that the income at NICOG has increased 8.2%, and then the expenses only increased 5.8%, so doing well there, not going over budget and stuff. They also wanted to make a note that the income is not just the dues that the counties pay. Majority of what it is it comes from Medicaid that pays for like transport services and stuff like that, so they wanted to make a note that that's not just all, you know, taxpayer dollars, dues from each of the counties, so they just wanna make a note of that. We went over just kind of a year review and just talked about a few different things, some of the housing, you know, where we fixed up some of the houses around the area, projects like that, through it's the housing, I can't remember what it's called. North,
Central Regional Housing Authority or something like that, NC,
North Iowa Regional.
North
yeah,
Iowa?
yeah, there you
North
go,
Iowa.
North Iowa
Yep.
Regional. Yeah, so they just kinda shared some pictures of that, they have their, builders, or, like the builder contract, it's some, where like contractors and builders and people can get together over in, Mason City.
Like a forum.
Yeah, they had several presenters and stuff, they just kinda went over that, they're talking about doing that again, but they're gonna scale it back a little bit because it was a bit much for, you know, what it was, but it still had a lot of really good, stuff. And I think that's pretty much it, not a huge, I think the biggest thing was the audit report, and spent quite a bit of time on that, so. Yeah. And that, I didn't have any other.
Just had safety meeting, and we'll all get the minutes, it was pretty simple, there really wasn't a lot to tell.
Okay. Kyle?
I had an executive committee meeting for CIJDC here, yesterday, that was pretty extensive, we went through the 2080 and bylaws, we're gonna have that as discussion here at this next meeting, and then maybe have a finalized version that can be approved at the following month's meeting, so hopefully we'll have some final drafts of that in the next month or two. I did email out everybody the code section that I was referencing before, it's 21.9 for exempt sessions. It is for employees not covered under bargaining units, and it's not a closed session, but it is an exempt session. So, check your email for that reference if you need, otherwise I think that's what I got for right now that hasn't already been discussed.
Okay. Yeah, well, since we met last 2 weeks ago, I had assessor meeting and farm bureau meeting, but everybody was there. I don't think everybody was at Farm Bureau meeting, but,
Oh, I guess, yeah, I forgot about that, that's been
that's been a long time ago. We were all there, so no need to, we'll have another meeting, don't forget to show back up at 4 o'clock for today, and then,
I missed the Farm Bureau meeting.
oh, yeah. No, it was, we had a good meeting, good questions,
Good
and,
discussions,
Yep.
questions.
Well, it's been meeting.
yeah, no, I enjoyed it, and then,
Didn't seem as intense as.
so I was getting ready to send an email to Visit Sewer, that very same day, I got a call saying we're in town, and, got some work done. What a deal, but,
You might be better off
we've
telling
narrowed,
not to come back.
well, we've narrowed it down now to, there is a block east of Fourth Street that is the biggest problem child, and that's what's blocking things for the 3 blocks west of there, primarily. Not that there's any issues in the rest of it, but that's the main holdup, so, they were coming back this week now, and I now have the guy who's doing the work's number 2.
Oh, I see, you got a direct number.
I got a direct number,
There you go.
As long as that doesn't change.
yeah, but,
Worse than that.
yeah. So, I'm talking with them this week, and as soon as the weather warms up a little bit, they'll be back and finish cutting that out and see how far we get. That's because the tile is still completely full west of there.
That's insane.
Yeah, but anyway, I think, Colin, real quick, with Jacobson Westergaard wanted me to bring up, if, as they go along and Reichels is working along and we find that there are spots that have gotten significantly worse that should be addressed, how far do we wanna go as far as what do we just let go? I know this was our discussion, but it's gonna be cheaper for the landowners to fix them now than to fix them individually as we go, but where do you stop? And I'm not saying that there's, but a handful, or if there's a whole bunch of them, but he says that, you could drone the ditch again, but that takes a lot of time and it costs too, but, just wanted to know our thoughts as they go along, what to leave and what not to.
I say don't leave anything big.
And then what do you classify as big, cause every
Yeah.
landowner's gonna have a different opinion on what's important or not.
And
I
that
know,
we
but
had-
if it's gonna affect the project, I mean,
Right.
you would think, you don't wanna start doing this and have one part of it that could really mess it up,
But we had,
not be given attention to.
we had quite a conversation about the extent of what the project would look like, and there was a lot of frustration voiced, and the desire to do a smaller, more targeted project was very apparently chosen. And
Yeah.
I'd be very concerned if you open up that can of worms, where you stop and where do you start? And
Right.
if you don't follow what was planned originally, it's
Well,
hard to
can you
go.
have, if there is something major that would need can you have that conversation with, that's probably too.
Yeah, and we will,
And
we
It
just
would,
will.
say,
it would have to
hey,
be a change order, and it
if
should
it's-
be voted on before it's.
And example being on Lindgren's that we just did this morning, have you been out there? I don't know if anybody's been out to see that one.
Not since they've done the work, no.
Well, before they did the work, see the big hole out there,
I
but
might have
you remember when we went and looked at Dave Rosenmeyer's out east of town? A
Yeah.
couple years ago, I believe it
Yeah.
was, and that was a huge washout, but this was like that, or, but that was not something that we had planned as part of the project, so that was
Yeah,
but obviously needs to be taken care of.
Right.
So,
right, right.
yeah, anyway, but do you think on it, I guess we'll bring it up again, so.
Okay,
Anyway, we'll take a motion to adjourn if there's nothing
So
else.
moved.
Okay, motion by
Second.
Garmin, second by Stecker, any discussion? If not, all in favor, aye.
Aye.
Any opposed? Motion carried, adjourned at 2:40.
Just a
You
quick reminder to, department head meeting Thursday, 9:00, forgot to put it on the agenda, to
Okay.
remember, sorry, so
I've got it on my calendar, but
Okay.
hopefully I'll be able to come,
Thursday, 9:00
if something
here,
changes.
Sounds good.
okay.
do you need me to stick around for anything?